What is the market telling me this week? This is the Nick Rutherford Report, and you're in the right place for news for your net worth. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it. Why am I watching the market? Because I want to take advantage of the market. I don't want the market to take advantage of me. Let's get right to it. There's a lot of interesting things that I've been watching over the last few weeks. The first thing here I want to point out is that maxed out borrowers see increasing delinquencies. And this graph you can see from the NewYorkFed.org that the lower quartile, the people who have the least amount of money, are seeing increasing delinquencies. You can see that right here on this line going up and up and up. This is way higher than any time back to 2015. And this is concerning and something that I'm keeping my eye on, because if people don't have money, and this always starts on the edges. So if people don't have money, like the poorest people don't have money to spend on things, then they're stopping buying stuff. And one person's spending is another person's income. So eventually this is going to ripple through the economy and could cause a big problem. But it's not yet, because this goes back to our themes that I talk about every week. See, I believe we have two different economies right now. We've got the old school economy and the economy that's serving the middle and lower income people. And then you've got the economy serving the rich people and on the cutting edge of technology that's growing and growing. See, NVIDIA reported its earnings yesterday, and they were blowout. They've gone up and up and up, and the stock went up and up as a result. And why am I watching this, and why is this important? Because if I'm invested in the trends that are leading the economy, I want to continue to watch the market to make sure that these trends are intact, not on tact. And why is this important? This is important because if I'm investing in these things and things change, I got to be paying attention, because there's a whole segment of the economy that's not doing well, and I'm waiting for that to bleed over. But Tesla also announced that they would come out with these semi-trucks. And that's interesting, because that just gives us more hype. This gives us more great things to look for in the future. And I'm not saying go out, run, and buy Tesla stock. Not at all. All I'm saying is there's a new economy that's going to be propelling us forward, and there's going to be great things happening in the future, and you want to be watching what you can take advantage of. But you also want to be watching things that could cause a market crash. And what could do that? Well, if the job market breaks, we're going to be in for a big problem. And that's what I'm watching very closely. That's why I'm watching articles like this. So a few weeks ago, Walmart lays off hundreds of employees and requires others to relocate. And who shops at Walmart? Medium and low income consumers. And this is why I'm watching this segment very closely, for the reasons that I talked about. Because there was another article like this where Red Lobster abruptly closes dozens of locations, losing its key supplier, and begins fire selling kitchen equipment. Now, this is a restaurant. It's not a premium restaurant. It's a restaurant that middle and lower income people go to. And this is just another sign for me that there's two economies, and I need to watch this closely, and I think you should too. And why is all of this happening? What is the market telling us? Well, consumer prices, let me get this headline in here so you can see it. Consumer prices have risen every month since Bidenomics began, up 19.5% to a record high. So, yeah, inflation did come down, but it's still sticky down here in the 3.4% range. And why is this a big problem? The same thing that I've been harping on. This is hurting middle and low income consumers the most. And one person's spending is another person's income. So eventually, this is going to ripple out and cause a problem. And it's clear in the data right here. So you can look at the price increases of McDonald's. The cheeseburger was $1 back in 2019, and now it's $3, up 215%. You can see the dramatic increases at Taco Bell as well. You've got this beefy 5-layer burrito. It was $1.70, now it's $3.70 almost. Just rounding here. And, everyone's income is not up. 19, 118%, 51%, 79%, 100%. Like, this is going to be a big problem if this continues. And why am I watching this? Because this is the market literally telling me what to do. It's telling me that there's big problems in a whole segment of the economy. So if I'm invested in businesses that are serving this segment and businesses that are doing badly, I'm going to do badly. So I need to be invested in things that are doing well and are going to continue to do well based on these trends. And the trend I'm operating under is there's going to be two segments of the economy, one that does good and one that does bad until we have a recession, and then everything is going to go and become bad. Now, what is very concerning is if you look at copper. Copper has been surging up and up and up. And I hope I've got this graph in the right place. Yeah, I do. And why is this concerning? Because if commodities and base metals go up in price, well, that's going to filter through to more inflation. So it doesn't really matter if this is some squeeze or if some trader is doing this, but at the end of the day, if prices are rising, it's going to hurt the economy if they rise too quickly. So why could this all be happening? Well, one thing that I'm watching here, this was a very interesting article. It's titled "The Start of the De-Dollarization, China's Move Away from the US Dollar." Now, this isn't some new thing. This is a trend that obviously has been going on, and it's a trend as old as time. So, like, every time there's a world reserve currency, over and over again, Ray Dalio has a great video on this. You can go watch that. But empires rise and empires fall. I think it's called something like that. Eventually, at some point, people are going to want to use less dollars, especially people like China. And this is important only if it happens dramatically quickly and there's some sort of currency reform. I believe that this is going to happen, but it's going to happen very, very slowly. And people get all excited about it and they worry about it. But why am I watching this? What am I getting to here? Well, let me get this chart right here so I can point it out. You can see that back in 2013, that the share of China's cross-border payments was all the way up at 87. Now it's down to 42. And now they're using their own currency, and they're starting to use their own currency at a higher rate than the dollar. And why is this something that I'm watching? It's just that I'm watching the trend, and this trend is going to mean potentially more inflation, higher gold prices, and problems for the dollar, because if people use the dollar less, then it's not going to hold its value as much if the government continues to print a lot of money. At least that's my operating theory. And here's an article that kind of supports this trend. It said global bankers are suddenly worried about the soaring U.S. national debt. So JP Morgan CEO Jamie Dimon argued in an interview with Fortune magazine that the record U.S. deficit is a cliff and we're going 60 miles an hour towards it. And I don't think anyone can argue with him. And why am I watching this? Because this is just a trend. This is why I have a portion of my assets in gold, just in case there's some sort of currency reform. See what happens next, and what am I doing about it? Well, I'm just watching these trends, and these trends continue to develop. So I put my positions on long ago, and when the market tells me something that I need to do, I'll do it. And this is why I'm watching the gold price. See, the gold price, based on all of these things, is going up. If you look at the chart here, on the left, let me get it in a better place. Oh, I can't really zoom in here. Let's see. All right, well, you can see that the gold price is kind of up. And the silver price, this is what's very interesting in the last few weeks. The silver price, now you can see that on the chart that is not covered by my face, is actually ripping higher. So we're over $30 now on silver, which is very interesting because typically, according to the experts, gold goes up and then people get excited and then silver goes up. So why am I watching this? Well, this just goes back to the theme that we're de-dollarizing, gold's going to get more expensive, etc. So the market is telling me that I need to be invested in gold. And I've been invested in gold, and I've been invested in gold miners when no one else wanted them. And all we're doing here now is I'm looking for confirming signals that this trend is intact so that then I continue to hold my positions. And this was an interesting article that came out that just confirms that. This way, I don't get taken advantage of by the market. I can watch and take advantage of these trends. So here, Nebraska ends income tax on gold and silver. Declares CBDCs are not lawful money. So what's interesting to me here is here's just another article of a state doing something to support gold and silver because they don't like the rate of inflation and the rate that the currency is devaluing potentially. I'm just guessing here based on what I'm seeing. This is what the market is telling me. And another thing that I'm watching very closely here is Bitcoin. Now, Bitcoin's been in a range. And what's interesting to me about this is this range is pretty intact. We're at 68,000 right now, and it's kind of just going sideways. But I'm expecting it to be much, much higher. Why am I expecting it to be much higher? Well, based on this data, and this is the data that I'm watching. This is from 100 trillion USD. This is the Plan B guy who he wants to remain anonymous, but he's got this whole model. And every time Bitcoin halves, you can see from this lower chart, and a lot of people have been watching this, and if you haven't seen this, you need to watch this, because typically in the past, Bitcoin it's programmed to have, and then it seems to go up a lot. So you can see this happened back here, back here, back here, and you know what? The halving just happened, so I'm guessing that Bitcoin's going to go a lot higher, and I'm watching the price of it to see what happens, because this goes along with all of the trends that I've seen. So I'm not selling here because a lot of people think it has gone up a lot already, but if the halving just happened and history repeats itself, we should be a lot higher in the future. Now, of course, I could be wrong and things could change, but I'm watching this because it just is another thing to invest in that goes along with the trends that I'm watching here on the podcast. So here's another thing that's very interesting. So all of the F-13s came out, and those are the SEC forums where we get to watch what people are doing, people who have smart money, as some people like to say. Now, of course, these things are delayed up to 45 days and 3 months, but Stanley Druckenmiller came out, and he said we had a hell of a run, and we can see that he sold his shares of NVIDIA. He didn't sell all of them if you look closely at his F-13, but why is this important? Well, it could be that he's calling the top here. And there's a lot of signs in the economy that we're getting closer to a top. And this is very interesting and something to keep an eye on. I think what can express that the best is this article here, and there's a great chart from Real Investment Advice. So here we have the 10-year Treasury bond and the 3-month Treasury bill inverted. And you can see that every time it inverts, back here in the 80s and the 80s again, the dot-com crash and during the financial crisis and right before the plague, it inverted and then it uninverted. And then we had a recession and everyone's investments lost money. Real estate, stocks, bonds. Well, not necessarily bonds. Bonds usually do well. I misspoke there. I'm just saying that assets in general, they go down except for bonds because everyone runs to safety. And here's the thing. Why am I watching this? I'm watching this because the inversion is signaling there could be a problem. And we can see that entire segments of the economy are having a problem. But I'm still long the segments that are doing well because until this inverts, if history is any guide, then the market can still go up. So I'm just watching the data. I'm waiting for the job market to tell me that it's time to have a meltdown, and I'll be on here having a meltdown because one person's spending is another person's income. So instead of freaking out, instead of letting the market take advantage of me, I'm using the data to watch to see what to do next. And right now, this is just signaling that there's going to be problems in the future, but until it inverts, I'm not too worried, and I don't think you should be worried. Of course, different data could come out tomorrow, and then it would be time to be worried. But until then, we're going to keep watching the market, and the market will tell me what to do. So if you like this, stick around for next week when we look at what the market is telling me to do. Hit that like button, subscribe to this, share this with someone who'd get a lot out of it, and I hope this was helpful. All we're trying to do here is watch the market and not get taken advantage of by the media and by Wall Street, so that hopefully you can make some more money and build your wealth. Until next time. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.